Good morning and welcome to IG's early morning call on IG Live on Monday, the 8th of January. I'm Angela Barnes. Coming up on today's programme. Well, the focus is on the US dollar, with the market now pricing in a 64% chance of a Fed rate cut at its March meeting after the release of the latest US jobs report. And Christmas shopping is all over. So how did the retailers fare? Well, trading updates will be in full swing this week. And US earnings are back. Four major US banks will officially start the first earnings season of the year this Friday. But first of all, let's start by taking a quick look at volatility and pull up the VIX chart to see how things are there this morning. Well, the VIX has fallen since Friday after reaching a level it was at on the 22nd of December, and it's currently up 0.41% on the day. Well, as noticed, US earnings this week may be the next source of trading volatility. For the broader market, the S&P 500 could be the area to watch. The main theme, though, is likely to be what sort of damage has been done to the corporate world from high interest rates. Well, the quarter's numbers will likely be the measure of that. Well, with 30 minutes to go until the European markets open, this is how the pre-market is looking across Europe. First of all, the FTSE 100 is set for a lower open, currently down 0.37% pre-market. France's CAC 40 just pretty flat there, 0.01%, marginally higher. Germany's DAX also set for a slightly higher open at the moment, up 0.04%. Well, European markets ended the trading session mixed on Friday after a rocky first few days of the year. Devon Mining was the stock to watch, dragging the FTSE 100 down with a 12% fall following the ousting of its CEO for serious misconduct. By the closing bell, it was still down 6.4%. Well, let's move on and look at how things were in the Asia-Pacific markets. Well, they reversed gains overnight with, let's have a look there, Singapore STI, well, ended higher, up 0.08%. Hong Kong's Hang Seng was down 2.17%, and Australia's S&P ASX 200 was down 0.50%. Well, Hong Kong's Hang Seng was dragged down by health stocks. Also to note, China's CSI 300 was also down after shadow banking conglomerate Zhangzhou Enterprise Group filed for bankruptcy liquidation late Friday. Japan's markets are closed for a public holiday and will resume trading tomorrow. Meanwhile, let's have a look at US stocks and how things ended on Friday after non-farm payroll data beat expectations. Well, the Dow Jones Industrial Average was up 0.07%. The S&P 500 also higher on Friday, up 0.18%, and the tech-heavy Nasdaq Composite also ended in the green, up 0.09%. Well, as noted, US non-farm payrolls are closely watched, the data that could affect the US Federal Reserve's thinking on interest rates. We'll have more on that in just a moment. But let's have a look, first of all, at how things are looking in pre-market on the US stocks. Well, the US 500 set for a slightly lower open, flat open at the moment, down 0.03%. The US Tech 100, that's the Nasdaq, also set to open lower, down 0.06%. And the Dow Jones Wall Street also set for a lower open, down 0.36%. Well, investors will be watching US inflation data on Thursday and the beginning of US earnings season, as noted, with results this week, all of which will likely drive resurgent volatility in indices, the dollar and commodity prices. And talking of the dollar, let's move on because, well, the US dollar remains steady this morning, and that's after being shaken on Friday afternoon following the release of non-farm payrolls. Well, Friday's data showed that the US economy created 216,000 jobs in the last month of 2023, more than the 173,000 in November and higher than the 170,000 that was expected. Well, the unemployment rate remained at 3.7%. Average hourly earnings rose to 4.1% year over year and 4% the previous month. Economists saw it cooling to 3.9%. Well, the labour market is no longer as tight as it was earlier in the year. But job growth remains solid, which leads economists to think that the Fed funds rate will remain unchanged for the next few months. A week ago, market pricing showed a 90% chance of a Fed rate cut in March. Post non-farm payrolls, this is down to 64%. Well, the next test for the US dollar will be consumer price index data on Thursday. Headline CPI should come in at 3.2% year over year, one notch higher than the previous month. Core CPI growth is also expected to accelerate to 4% year over year from 3.8% the previous month. Well, the dollar is currently up against its peers on the day at just switched now. It's just gone down 0.02%. And meanwhile, in Germany, the trade surplus widened to $20.4 billion in November as exports rose more than expected by 3.7%. Imports also rose, but by a softer 1.9%. Well, if we just switch over to the euro-US dollar price chart, the pair has lost ground during the early session, backed by a stronger US dollar and higher US Treasury bond yields. It's currently slightly up 0.01%. Meanwhile, in other European data to keep across today, well, that includes at 10 a.m. the Eurozone economic sentiment forecast, which is set to marginally rise to 94.1 in December. November retail sales are also out and are expected to fall by 0.3% month over month. Well, after a first taste last week with Next, Christmas trading updates will be in full swing this week. Among them were 3 UK supermarket chains, Tesco, Sainsbury's and Marks and Spencer. Recent data suggests UK supermarket giants Tesco and Sainsbury's have increased their market share. Sainsbury's in particular experienced a notable increase, reaching its highest market share since December 2020 at 15.8%, according to data from Kantar. Well, Tesco remains the largest grocery retailer in the UK, with a market share now standing at 27.6%. When it comes to retail sales over Christmas, Mastercard data, which measures both in-store and online retail sales, showed a 2.6% rise in sales value between the 1st of November and 24th of December period compared to last year. An increase in value due to high inflation, not because consumers are purchasing more items. Well, in volume, sales are expected to fall by 4.1%. Looks like UK consumers have been waiting for Christmas to be over to shop, though. According to research group MRI Software, footfall rose 4% across all UK retail destinations on Boxing Day, but a number that remains 14.9% lower than 2019 levels. Now, if we move over to have a look at Tesco's share price. Well, Tesco, Sainsbury and M&S had a very strong 2023 when it came to the share price. M&S was even the second best performer on the FTSE 100. Tesco's share price has gained roughly 27% since the start of 2023. Sainsbury's, meanwhile, its share price has risen about 29% since the start of January since 2023. And then M&S's share price, just switch over to that price chart, it too has gained about, 111% since the start of January 2023. So a good year last year for those three retailers. Meanwhile, on Friday, 4 major US banks will kick off the new earnings season. The largest of them all, JP Morgan, is set to report earnings of $3.53 per share, down 0.7% on the same quarter a year ago. But revenue is expected to rise by 11.8% to $39.8 billion, boosted by the ongoing integration of First Republic Bank into its business. Well, in the last 12 months, JP Morgan performed better than its US peers, gaining around 27% in the period. Since the very end of October, JP Morgan shares have been almost constantly rising, setting a new all-time high last Thursday. On the other end of the spectrum is Bank of America. The earnings per share is anticipated to fall by nearly 20% to 68 cents. Revenue is also expected to decline 2.6% to $24 billion. Well, the Bank of America lagged the broader industry in 2023, only gaining 0.9%, an underperformance partly due to a slower recovery from the March 2023 US banking turmoil. Well, that said, the stock has gained 37% since the end of October and now trades at a 10-month high. While in the fourth quarter of 2023, bond yields fell on expectations of rate cuts ahead. US 10-year Treasury yields eased sharply from a 5.02% peak to just over 4% currently, while falling yields may help to ease some pressures on the bank's funding costs. Wells Fargo and Citigroup, meanwhile, are the other two banks due to report on Friday. Goldman Sachs and Morgan Stanley will then report on Tuesday, the 16th of January. Meanwhile, US healthcare giant United Health is due to report before the market open. Analysts anticipate earnings of $5.99 per share on revenue just short of $92 billion. Well, 3 months ago, the group raised its full-year forecast on the back of stronger than expected results driven by an increase of its customer base. Meanwhile, all eyes will be on the share price of the airline carriers impacted by the grounding of dozens of Boeing planes. It's after the US airline regulator ordered the grounding of some Boeing 737 MAX 9 jets after part of one plane fell off during an Alaska Airlines flight on Friday. Well, the Federal Aviation Administration said the inspections would affect 171 planes operated by US airlines or in US territory. Alaska and United Airlines said late Saturday that they were grounding their entire fleets of Boeing 737 MAX 9s. Well, if we just look at the Boeing company all-session stock, well, that's what we'll be watching out for at 9 a.m. when it starts trading on the IG platform. Meanwhile, moving on to commodities, and let's have a look at oil prices this morning and see how Brent and US crude is doing. Well, let's start first of all looking at the Brent chart. That's currently down 0.95%, trading around $77 a barrel. And then if we move over to US crude, also down this morning in the red, down 1.04%, trading around $72 a barrel. So that downward pressure continuing after last Thursday's volatility. Last Friday, the Baker Hughes total rig count fell by 1 to 621, although the number of producing oil rigs rose to 501 from 500. Meanwhile, let's have a quick look at gold and silver. Let's start with gold and see how that's doing this morning. In precious metals, well, gold is also lower on the day, currently down 0.8%, but it's still trading above that $2,000 level, although far off that peak we saw there on the 3rd of December when it was at 21.45. And then if we move over to silver, that is also down on the day, currently 0.83% in the red, trading 22.98. And then if we move over and have a look at copper this morning, well, it's marginally higher, up 0.06%. Copper has been on the decline, however, since the 28th of December, but just currently higher on the day. Well, that's all we've got time for this morning on Early Morning Call. Thank you very much for watching, and do keep across all the IG social media platforms for all our updates and market analysis. We've also got Beat the Street this afternoon with Angeline Ong ahead of the Wall Street Open, so do tune in for that.